that is the toughest thing to do.
I don't feel that way. So I think accountability is critical. I'm glad you said that because that's one thing I left out. I've always felt that anybody that comes through my team or that's in my vertical whatsoever, I own it.
Mm-hmm.
If they fail, it's my fault. What did I
Mm-hmm.
not provide them with? So I love
Okay.
that car.
Okay.
Fantastic car. But there's a big difference between a GTR and a Lamborghini. And I had the opportunity. I sold my GTR, did really well. And I was like, you know what? I want to get in that circle because I want to surround myself with people that are doing things bigger than me to learn from. So that was my initial reason. I wanted a Lambo anyway. I bought it and it instantly brought me into that group. The guy that kind of that runs it, he's a big YouTuber. He messaged me. He's like, "What the hell?" I was like, "I was going to get one, man."
We're podcast, and today I have the pleasure of introducing and bringing to you a guy who is, and he has accomplished a lot of things in the data management structure side of things, and also he's also branching into a different industry, which is a very interesting industry, and I'm pretty sure a lot of you watching this are probably in that industry. But Justin, if you want to go ahead and introduce yourself, that'd be phenomenally appreciated.
Yeah, great. Thanks. So I'm Justin Windle. I was 26 years in corporate America, mostly in technology and data and analytics. I spent the last 5 or 6 in executive roles for Fortune 500 companies, but I've branched out recently. I've always had the entrepreneurial spirit. So I have 2 companies that I've built now. I've built a real estate investment company as well as a data and business consulting company. So yeah, I've always had that entrepreneurial spirit. Decided after 26 years, quarter of a century, that's a
Yeah.
long time. It's time to kind of bet on myself, and I've bet pretty big on it. So
So I'm very intrigued now because you said you made that transition from being you were an executive in corporate America and then you transitioned into working for yourself. What was that switch? What was that motivation?
So I think where it came down to is you start to feel yourself shift. And when you're in a corporate environment, especially at that executive level, things are very much more politics
Okay.
and it gets to be challenging, right? And I start to feel myself just consistently not happy with how things were going. I had a very specific set of ways I wanted to drive things. I always focus on customer, I always focus on the company and doing things the right way.
Yeah.
And I realized that no matter what, when you're in the corporate world, you're always answering to somebody else that has a different agenda. So after a long period of time, I just realized I've reached what I wanted to do. I've climbed the corporate ladder and it wasn't getting to where I wanted to go, where I could really help mold and drive some changes without playing the political game. So that was where I kind of said, you know what? I want to make sure I'm doing what I feel is right for me and I'm making a change in people's lives and leave my stamp on the world. So to do that, I need to make the shift and start to do my own thing.
Now so this is just a diversion here and then just an interesting question. Have you read the 40 Laws of Power by Robert Greene?
That one I have not. That's on the list though.
So the book mentions, I can't remember what law it was, but it says never outshine the master, right? There's a section about it there, and it basically kind of talks more about the ego and how we all have an ego.
Yeah.
Right. And because, I've also been in corporate America and I've dealt with the politics and the ego side of things. But now this is just out of curiosity, right? Every business was not founded off of ego, right? Entrepreneurs found the business on the premise that we believe we can change the world, 100%. Right? And then the world ends up slapping us in the face a couple of times. Like, yeah, we have the belief that we can change the world, but now what measures are you putting in place that what you're building right now doesn't get to that level where it gets political?
Yeah, and I think you brought up a great point because I think what you run into is most companies are built with a positive intent, make some kind of impact. Of course, there's a monetary side of it, but when you get extremely large, like some of these Fortune 500 companies with 15,000 plus employees, you're always going to get the people that are just trying to move up. That it is the ego that's driving it.
Yeah.
So for me, it's about running lean and having people that believe in the vision. And I think from a leadership perspective, and this is what I see as a difference between management and leadership, is my job is to set the vision, get people built in and bought in on that, and then empower them. So my job is to give them every opportunity to succeed, give them the direction, and then let them do their thing. So from my perspective, from my companies, I don't want managers. I want leaders. I want to empower the employees throughout. Every employee, even when I had 60 plus 4 different levels of people, every one of them had time with me directly. And I just feel like you need to have a little more flat organization as far
Yeah.
as everybody has exposure to everybody,
Yeah.
even though there's still a hierarchy and have to. So for my companies, it needs to be the same way. If when I bring people in, they need to be leaders, not managers, not micromanagers, really focused on the vision, able to articulate the vision throughout the rest of their company and bring it
Mhm.
all together.
Now this is also another interesting part as far as because you're looking for leaders, not managers, right?
Right.
Now, what is the distinct quality that you see? What's that distinct difference that you say, okay, this person is a leader and this person is a manager?
Yeah. So for me, managers typically focus on just the basic metrics. Did I complete X on Y? And if
Mhm.
not, I'm going to give them a hard time and push them to work harder. Right. To me,
Mhm.
that's people who are typically managing. Leaders are there to inspire and empower.
Mhm.
They're there to, like I said, articulate the vision, but then give people the ability to succeed, set them up for success. Whatever they need to be successful, that's within the right realm. They need
Yeah.
to be providing that training, time, all those different things. A leader should, and this is going to be unpopular to a lot of people that classify themselves as leaders, but leaders should have most of their time dedicated to their staff. They should be focused on their development and then spending the time with them that they need and then getting them prepared versus constantly managing up,
Gotcha.
right? If they lead correctly, that part will solve itself because the team will be working well together and executing and moving forward.
Gotcha. Now, okay, what's interesting about that is because you said something which is very interesting. You said, they're giving time to your team, right? So it's almost like a sacrifice, right? They're putting in that
Right.
sacrificial effort. Now, let's just say there's a leader there. There's somebody who is, there's someone who's a leader that's watching this and listening to this. What is your business doing to attract somebody with that quality? Because finding somebody with that quality is, especially retaining the quality, because
Yeah.
most people come in with it, but they don't retain it for a long period of time, right? They almost end up,
Yeah.
giving into a system. But how do you attract somebody with those qualities?
So there's a couple pieces to that. I think
Okay.
one of the reasons people move from leadership to management is their leader. So
Mm-hmm.
is a vision not straight, or is it just push, push, push? And I've been at the top levels of companies. It's bottom line, especially when you have shareholders, all the things. I get it.
Yeah.
But to me, if you have that problem, you're either doing too much busy work. And I made a
Mm-hmm.
LinkedIn post about this. Stop the busy work. Focus on what actually matters and what moves
I,
the
I
needle.
read that. Yeah.
Yeah. And then make sure your systems and processes are in place. Do
Okay.
you have a bunch of broken systems that create a bunch of manual work that have not been thought through? In
Mm-hmm.
most companies I've been in, I've noticed that they run a mile a minute. They just go fast, 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 try to drive the bottom line, but they never look back and say, did I optimize my processes? Did I
Mm-hmm.
streamline where I could? Did I automate where I could? They just kept piling on more and more work.
Yeah.
So, from my perspective, if you create a company culture that allows people to be their best every day and you give them the opportunity to be their best every day,
Mm-hmm.
they're more likely to be retained.
Okay.
You're always going to have some people that just don't fit in that. Not everybody is a good employee, and you have to be able to
Mm-hmm.
work through that pretty quickly, give them the
Mm-hmm.
opportunity, but then move quickly. But keeping that company culture in effect
Mm-hmm.
and making sure you have the right people in place will help retain the larger group because
Gotcha.
people want to be in that company. They know they have an impact. They know what they do matters. All those things help drive that retention.
Interesting. Okay. Interesting. Okay. Now, so from a leadership perspective, right? And let's say I'm leading a team, right? And because you have strategic data consultants,
Yep.
and because you guys focus more on the data side of things, right? Which means
Primarily, yes.
um, in leadership, there is the part that I think the most important part about leadership is ownership, right? You got to be willing to
Yep.
own up to your mistakes, right? But that is the toughest thing to do.
I don't feel that way. So I think accountability is critical. I'm glad you said that because that's one thing I left out. I've always felt that anybody that comes through my team or that's in my vertical whatsoever, I own it.
Mm-hmm.
If they fail, it's my fault. What did I
Mm-hmm.
not provide them with? So I 100% agree with that. And to me, the people that feel that that's too difficult to take accountability,
Mm-hmm.
there might be a bit of the ego problem.
Yeah.
Now, I get it. When you have 4, 5, 6 layers of people under you, you don't have vision across all of them all the time.
True.
But I still go back to what are your processes?
Mm-hmm.
How are you ensuring the vision is consistent throughout the group? How are you ensuring that people know what they do and that it matters and that you've enabled them and empowered them? If you do those things well, the rest should start to take care of itself. So you should absolutely be accountable for everything that's in your vertical. You have to.
Yeah. Okay. This is because This is a very interesting thing. This is a very interesting topic for me. Is now, do you think accountability and ownership is something that is learned, or something that you're born with per se? Is it a personality trait, or is it something that is taught? Can it be taught?
I think it can be taught. I had my problems when I was younger. I
Yeah.
had my ego as I came up because I started early.
Mm-hmm.
Uh, so I had my ego and I didn't take accountability. And I think that as you kind of mature professionally and personally, you start
Mm-hmm.
to see the value of that accountability. So I do believe it can be taught. I do believe there's some people that are inherently more mature in that space
Mm-hmm.
and take accountability, but it absolutely can be taught.
It can be done. Okay. Now, so I'm very intrigued as to, so when we spoke, we chatted a little bit, and you're talking a lot about data, right? And
Yep.
you talking about artificial intelligence into data, right?
Yep.
Now, I'm just, before we kind of get into like diving into that topic, do you think artificial intelligence is going to replace data analysts, and or is it going to be an aided tool, or is it going to replace?
So I would say portions of data analytics can be automated or replaced through artificial intelligence
Okay.
as intelligence continues to mature. When
Okay.
we first talked in Vegas, like Chat GPT didn't exist yet.
No, it didn't exist. No.
Right. So I would have had a different answer back then, but they've come a long way. The problem is majority of people that have talked AI for the last decade have not done AI. They've
That's true.
done like a machine learning or some kind of decision tree or different
Yeah.
things like that and called it AI. We're starting to actually see more intelligent actual AI that's starting to
Mhm.
come across, and it's coming quickly. And that's why there's so many nervous people in the scientific industry.
Yeah.
Uh, but back to the data perspective, I think portions of it absolutely can be. And you're seeing that people are doing whole companies based on AI and Chat GPT and other ones that are out there.
Yes, yes. The amount of Facebook ads that come across my feed on some, you can write copy with this, you can do this, you can do, and then it's almost like to the point where, and I've also played around with Chat GPT. You cannot tell the difference between the human element and the machine element anymore. It's
Right.
almost like the two are now blurred. Now, can you talk a little bit more about what you do as far as SDC, strategic data consultants, and what you guys do, what the customers you help?
Yeah. So I tried to get away from the corporate
Mm-hmm.
data side of it, but my passion's still there. So what I've noticed as I've worked with some of these larger companies is most are still struggling to
Mm-hmm.
kind of really get that off the ground.
Okay.
And so for what I've done is I've spent a lot of time with a lot of the big four consulting companies that do a lot of the work. And I see there's just mostly like copy and paste work. They try to make it fit for every company. It doesn't work.
Yeah.
So as strategic data consultants, we create bespoke solutions based on a company's needs.
Okay.
So my primary kind of claim to fame is enterprise data management. And how do we identify, curate, and ensure quality of data for purposes of analytics or modeling or whatever that want to do. So we focus in on kind of understanding the company and providing a solution fit for their size. So we're not going to come in and recommend the most expensive utility in this huge overhaul if you're a $1 to $10 million company. That doesn't make a lot of sense.
Mm-hmm.
If you're a massive corporation, you're trying to do something small, we'll talk to you about the risk you're creating and the things
Yeah.
you're leaving on the table. Another thing we do are what I call power calls. So for an hour block, get on the phone with me and we're going to go through all the challenges you're having. And I've done this with a few different companies so far. So they basically come and they get 26 years of experience crammed into an hour.
Mm.
So they come and say, here's the problems we're having. Can't get over this, this, and this. What do we need to do? So I'll understand just some high level about their company. I'll give them some industry best practices. I can recommend some tools in some scenarios, but I recommend they do a lot more due diligence than an hour. And we basically start to solve these hurdles that they've been facing for, months and years that they've thrown tons of bodies at but couldn't get resolved.
Can you give us an example? Because like I'm listening to that right now, and I'm trying to imagine what you're talking about. But now, because I'm not an enterprise company, right? Let's say
Right.
a company that's doing under a million, or right around that million mark. Now, obviously, if I'm looking for your services, then there's got to be a high level of data restructuring that has to be done, right? So now, give me an example as far as like I get on the phone, I'm calling right now, and I'm okay. You pick up the phone. What is that? What would make me call, hey, Justin, we need to talk?
Yeah. So what you tend to see is companies are sitting at a threshold, right? They've grown to a decent size, but now they're like, I can't really bring it all together to go to the next level.
Mm-hmm.
So they typically bring me in to say, okay, how do I get better use of my data? How do I know which data is good? So we would talk about core data quality concepts. We'd talk about data landscaping. So how to bring all your disparate data together and catalog it to know what you have.
Mm-hmm.
And we talk about things like metadata. Have you done those types of things? And I give recommendations about how to do risk-based metadata. So
Mm-hmm.
instead of trying to boil the ocean, you hone in on the things that make a material impact to your company. So you can actually reduce your overhead and time spent kind of getting off the blocks by
Mm-hmm.
really kind of keying in on the top 10% that probably drives 80% of your information.
Now, how does the metadata aspect of things, how does that increase? Because almost every company's concerned with the top line, right?
Right,
The top
right.
line revenue, right? How does that increase my revenue and, make my EBITDA look really nice for, for the
Yeah.
investor?
So what I've seen a lot is people don't know what they don't know. They don't realize what data they have, and then if they're running a mile a minute, they have like 50 disparate processes,
Mm-hmm.
and they don't know what the other one's doing. So
Mm-hmm.
bringing it all together and knowing what data's together, like you might have customer balance in 5 different places, but what you don't realize is one is net, one is gross, one is has
Yeah.
charge-offs or whatever it is.
Yeah.
So bringing that all together, and the metadata says this is what that actually is. So now I can start to look at it in the analytics that I'm putting together to determine what I'm actually doing as a business.
Mm.
I now know I'm pulling the right piece, I have the right quality, and I can streamline it and get to it a lot quicker because I know exactly where the right place to get it from.
Got you. So it's more of identification of the weak areas as far as what areas are, we're either over focusing on or where the interpolation is wrong, per se.
Yeah,
Right?
yeah. That identification to me is the first step. You have to know
Okay.
what you even have.
True. Which now let's say I'm watching this and ideally a company that would need the service is someone doing what, over 10 million a year in EBITDA, or we're looking at
No, I would say I'm doing those efforts in my real estate company that I'm building. So
okay.
I have already identified, okay, what are my key components? What are the key elements that I need to have? I need to know, for my SFR side, for my single family residence side, I need to know what my square footage is. I need to know what the average price per square foot for the area and the comps are. I
Mm-hmm.
need to know what my estimated renovations are. I need to know all those different things to determine my profitability before I buy a house.
Okay.
So I've identified the core elements that I need to have, and the next phase, I've already built out a custom calculator to be able to do all that quickly, so I can know exactly whether I should buy or not.
Now, what's interesting is because I'm looking at it from your perspective and I'm looking at it from a different perspective, right? The way you're analyzing it is more of like a prevention is better than cure, right? It's like, okay, you're going to the doctor, doing your regular checkup. Now, let's just say I'm a business and there's something wrong, but I don't know what's wrong, right? Like,
Yeah.
for instance, you've already analyzed the data before you move, right?
Yeah,
Most people actually move, then they get the data.
100%.
Right. So now how do I know that I have faulty processes and then there's areas that I need to fix? Because most people don't know they have a problem until it explodes.
100%. And that's why I've been able to accelerate in my career, was because I understood the lineage aspect of it. I understood how to back into where the problem is.
Okay.
We would start where identifying the problem, like our reports are not footing correctly, or these numbers
Mm-hmm.
don't look correct, whatever the problem is. Or we're having a huge loss segment, we don't understand what's going on, and you start to go backwards, and you have
Okay.
to trace what they call hops, right? Trace backwards in that data flow. So I'm going to start with my report, and I want to see this particular one doesn't look right, we got a problem here. Where did I get that data from? Who owns that data? How does it get input? How does it get transformed, etc.?
Okay.
And then sometimes at large companies you might have 30, 40, 50 hops, which is part of the problem, and
Okay.
you identify where all the breakdown points were.
Okay.
So then I actually had this problem with the general ledger at one of the large companies I worked for, and we found a $13 billion variance.
13.
And 13 billion, yeah.
Okay.
So they had it was like a 3% variance they were comfortable with. And after I cleaned everything up, cleared that up and traced back to it, I automated the reconciliation process, and we found a 0.04%, which is sub rounding error issues.
Okay. Okay.
So by being able to trace that back and identify there were some code changes that were happening that nobody knew about, that we were able to isolate and correct, and then simplify and automate.
Got you. Interesting. Okay, so now that's very interesting, and we're going to kind of dive into that. Now, I'm very intrigued because you mentioned, you're using data analytics in the real estate now side of things. Now, you're more on the investor side, right?
Correct.
And what can you tell us a little bit more about what you're doing as far as in the real estate industry?
It's ever changing.
Okay.
But right now I'm doing some fix and flips. I'm in some different areas where I'm trying to basically go through and find some distressed homes and kind
Okay.
of fix them up, get them ready for the next homeowner, and in some cases, fixing them up to rent. But the focus now is finding the area of opportunity where I can help a neighborhood while making a profit.
Okay.
So we talk about data and the analytics perspective of it. There's a ton of data that goes into that.
Okay.
It's checking the areas. What's their projected growth in that area? Are there
Mhm.
people coming in? Are there major companies in the area that are going to look for people? I'm in Columbus, Ohio. We have Intel coming in. We have
Okay.
Amazon growing. We have a lot of companies that are coming here. So it's a great investment spot. But
Okay.
not every subsection of Columbus is great. So you've got to find the parts that are going to do well and you can actually go and make some money in.
So when you're looking at the data as far as where you're going to invest in, right now, obviously, what are the key 5 areas? Let's say I'm new to the investment game and I want to buy my first property to either flip it or I want to get it to rental, getting some rental income. What are the key areas in the neighborhood that I'm looking for? Am I looking for schools? What are those key areas?
Yeah, normally I would have said schools, but I actually don't look at schools.
Okay.
So depending what you're doing, if you're doing a higher end, so if you're trying to get the five, six, $700,000 home, you better find a good school district,
Okay.
right? People aren't going to spend that. But I look at particular areas that are up and coming. So
Okay.
maybe there are areas that are struggling right now, like the one I'm in. They're 100-year-old homes. Most of them are pretty worn down. There's some vacated ones, but there's also investors coming in. It's a mile away from Nationwide Children's Hospital,
Okay.
major hospital, tons of nurses. I've already had a nurse come through and say, "Hey, when are you going to have that done? I'm interested in this house."
Interesting.
And the house is still gutted.
Mm.
But I look in the area and say, okay, I would like to have below a certain crime rate if I can. I don't want a major crime rate because I
Of
don't
course.
want to try to bring somebody into a high crime area. Although the area I'm in has a decent amount of crime, but it's getting better.
Okay.
I look at, are there major city investments happening? So you think about like Nationwide Children's, like I mentioned, is investing in that area. They're trying to make sure we bring that area up, run out some of the crime, and improve the homes and the life for the people that are there. I'll look at what's a good size home, like beds and bath for that particular area, what sells well, and what's kind of the typical once renovated, what's the ARVs or what's the average comp rate for a renovated home there.
Interesting. So what is that ideal number you're looking for?
I look at percentages. So I want to typically, if I'm switching over to faster cosmetic flips, but if I'm doing a large one like I'm doing now, 3-month reno, large scale reno, I want to still have about 50K of net profit on the back end.
Okay.
To me, that allows me to go and make some adjustments. The one I'm in now, I'm actually extremely over budget, but I changed my path in the middle. I was going for a rental,
Okay.
and then I realized that these are actually doing well as flips. And I went from a $56,000 budget to almost $100,000 budget because the margin was there, and it's an area that's up and coming. It's going to do fantastic in 3 to 5 years, but it's not where I want to buy and hold today.
Interesting, interesting. So okay. So in a way, you play both sides of the market as far as you can buy and hold it and rent it to build some equity, or you can go from the other side of things of like buy it now and sell it. Now this poses another question: is are you in any way worried about the rise in interest rates and the fact that most people don't want to get a mortgage for at 6% or whatever it is? Is that a concern of yours? It might be an issue selling it.
So it'd be more of an issue if I were in the higher end homes.
Okay.
So like my neighbor right now has been trying to sell, and she's dropped it $50,000 already within a month or two because she's got 2 mortgages. It's hard to sell a higher end home with a
Mm-hmm.
high mortgage.
Gotcha.
Where I'm at now, I purchased a home for $105,000,
Mm-hmm.
and I'm going to end up putting close to 100,000, maybe a little less. And the one up the street, the same layout, sold for 320. So when you're in the 300s, you feel the impact a little bit less from that interest rate. It still
Mm-hmm.
hurts. It's still a lot, but if you're going to have one of the nicer homes, people are still buying. The market, you can't believe everything you're hearing in the news. The market's still hot.
Okay.
It is impactful. It is hurting people because they're paying a lot more than they did before. But those 2 and 3% interest rates are not normal.
Okay.
We start to feel like they were normal,
Yeah.
but they're not. And I was in banking for 16 years, and I'm used to seeing 5, 6, 7, even 8% interest rates on mortgages. So where we're at now is it's starting to cool off a little bit and stay in that sixes is actually pretty average. It
Okay.
just doesn't feel that way because the home prices have gone up so much so fast.
Yeah, because if you go on a 30-year mortgage on a 6% and you're paying 200,000 over what the house is worth, you already, factoring over 30%, you're paying more than 50% of the home value back to the bank. So
Yeah,
I mean, in a way, it's profitable because if I'm looking at it from a bank perspective, but also I'm looking at it from a perspective of now this is just me diverting here.
yeah.
If I have somebody who comes in, overpays on a house on a high interest, right? Now, doesn't that leave the factor that they might default?
Well, be careful on the term overpay. So most banks are not going to allow you to do that now. So
Okay.
the inspectors are going to be a little more diligent on the prices in most cases. So
Mm-hmm.
when I look at this house, I actually had a comp sent to me, or I had what they, I'm trying to remember the exact name they called it, but it was an analysis they put in that said, basically, with what I'm doing, I've made the entire house new. I've
Okay.
added $275,000 in value to the house, and that's without the extra bathroom and a half that I added. So
Interesting.
I've added over $300,000 in value in this house,
Okay.
but I'm not going to sell it for 400,000 because I don't really think I can't see somebody paying 400,000 in that area. Now, if they run it up on bids, great, you guys go for it. But I'm going to price it reasonably according to the neighborhood and what's going to happen because it's still profitable for me and I can help somebody else.
Gotcha. Well, I mean, if you sell for 400, you just raise the value of everybody else's house in the area. Because
Exactly.
now it's like, hey, Justin sold that house for 400, and then you're like, well, you know what? My house is all broken up, but it's going for 450, right? So in a way, you kind of raise the value, but then again, everyone will still eventually come back to reality. But now, so walk me through the process as far as how do you go from, we go from, working as an executive, right? You're
Yep.
working in the financial industry to, starting your own data consulting firm to now, okay, I'm going to branch into real estate.
Yep. So I've always had the focus of I need to build passive income.
Okay.
Because that's my retirement plan. I want my money working for me and making money for me. So even in my last years as an executive, I was building up cash stockpiles to prepare to go into the real estate market. That
Okay.
was always my intent. So the challenge was right when I was starting to get ready to invest, losing the job there in the corporate America and saying, okay, well, now I don't have that salary. So I've got to figure out what I want to do. So the reason I started two companies at a time, which I usually don't recommend, I recommend focusing on one and building it out. The consulting company can build capital
Mm-hmm.
because I can leverage the experience that I have, really help some companies and give them an opportunity to gain this knowledge without paying, multiple six figures for an executive.
Mm-hmm.
So it was a way, it's kind of a win-win. I could help people in the industry as well as make money that could then keep going back into real estate. Real estate's always been my long-term play. I think
Okay.
it's just one of those things that can really build wealth, and that's what I'm
Okay.
looking to do.
Okay, you're looking for now. Okay, so this is a very interesting part for me. Is everyone says real estate is passive income, right? Which it does have the potential for passive
Parts of it. Yeah.
parts of it, but how much time actually goes into finding the deal?
Well, here's the thing. Early on, and I'm a firm believer early on, it's not passive and it shouldn't be passive. You should be
Okay.
getting your hands dirty. I go to my property, I work on the decks, I'm working on different things, I'm fixing things I'm seeing, I'm general contracting for my contractors. I want to be there personally. I'm there probably usually 4 to 5 days a week.
Okay.
And I want to be there. I want to understand what's going on. I want to make sure that I'm there to answer questions, run parts, whatever I need to do. And I think that's critical because as I expand my company and I hire other people to do it, I want to know what I'm asking somebody else to do. Kind
Makes
of
sense.
back to the leadership versus management thing, right?
Yes.
I want to guide them. So from my perspective, early on, it's absolutely not. I've just created another job for myself, but that's okay because I'm building something. Now, as I ramp up and really get into multifamily, which is where I want to go, which you can talk about if you want,
Yeah. Sure. Of
I'm
course.
going to hire people,
Okay.
right? I'm going to hire somebody to find deals. I'm
Okay.
going to hire property managers. I'll hire construction companies. So it will run itself. If I do it correctly and I set up the right systems and processes, it ultimately essentially runs itself.
Okay.
But that's where people struggle and get stuck because they do a lot of single families and up to like 10 to 14 units. You don't want a property manager. It doesn't make financial sense. So you're trying to manage all those properties. You're fixing toilets, you're fixing sinks, you're answering calls, you're doing all these things. It is a massive, massive job. But if you scale correctly, you can then create the teams and the processes to automate.
Got you. Now, I know you mentioned multifamily homes, and how we met was we met at the 10X GrowCon, which there's a key question I want to ask there.
Yeah.
But how much of that knowledge did you learn from actually listening to some of Grant Cardone's content in regards to, single family homes? You might want to stay away from that.
Well, I'll tell you that conference was mind expansion, right?
Awesome.
So it made me think a lot bigger. I thought I was thinking big, but then going and sitting in that room full of, multi-millionaires and billionaires, in Grant's case, hearing the scalability and growth opportunities, it really kind of made me think differently. I'm like, okay, I can actually scale this faster. I can go bigger. I should do multifamily. I still like single families in certain things. So I'm not as anti-single family as Grant is, but I do see the value in multifamily. And since then, I've connected with a ton of people, some from GrowthCon, some from the Real Estate Summit in Miami,
Gotcha.
and some just that I've met along the way. And the consensus is the same. Multifamily is where the money's at.
So multifamily is more of the buy and hold strategy and fill the
Yes.
doors, and then single family is more turn it around.
Well, I think you can still do buy and holds in single family, but understand that you're going to have to do more work there. And it's slower for scale, right?
Gotcha.
You're doing one door at a time.
Mm-hmm.
I'm looking at a 288 unit here. I don't think I'm going to be moving forward with it because it's a little too big for my first jump on that one. But I'm looking at larger scale ones because I want to create the processes to then streamline and jump. But I agree with you, especially in today's environment, until end of year, kind of till mid next year, multifamily is going to be volatile. Everybody's on those adjustable mortgages or different problems, and they're going to have to get out of it. There's a 1.5, I think it's 1.5 or 1.8 trillion dollars.
Wow.
That's probably going to have to be restructured or change hands from now to 2025.
And what do you think is going to play a key role in the move in the restructuring?
So you got a lot of people that were running low profitability on these large multifamily units, and then you're running into now they have to refi because they are on a 3 or 5 year ARM, adjustable rate mortgage, and they have to refi and it's no longer profitable. So they're going to have to get out of those properties. And it's going to be one of those great times to pick something up on a discount because you have some of these major companies that have thousands and thousands and thousands of doors, and they're like, I don't need this one. Get rid of it. Just get it off my books because it's going to be too much to deal with, and you can get it at a discount. So that's what I'm trying to position myself for.
Interesting. So you're waiting for that restructuring process. It's like 2008, and there's a saying that you don't make money when you sell, you make money when you buy.
Right.
And it's almost like the way I'm looking at it is the entire U.S. economy is about to go on sale, and if you're in a position properly, you could come up on the top. Now, so I'm interested because we had a conversation as far as you were a diamond member when you came into 10X GrowCon, right? Yep. And you made a very important point, right? It was not even because for everybody watching to have that ticket, it was a $20,000 ticket to get in, right? And I was like,
10.
And
10. It was 10.
It was 10. It was 10. Okay. Victor told me it was 20. Okay. But it was 10. Okay. So 10,000 for most people is not a small amount of money, right? A lot of people make probably 10,000 a month. Some people might even make 10,000 every 2-3 months. Now, I don't know if I asked you the question. I was like, how are you able to justify paying 10,000 for a few days, right? Because a lot of people are like, that's a lot of money, but how are you able to justify making that payment for 10,000? Because what you said, I really want people to hear that.
So it's not even that; it's paying the 10,000 after not having an income for like 8 months.
Yes,
it took some thinking, but the reality is, if you want to play in this game and be on that level of wealth, you have to pay to be in the right room. And the reason I say that is the people that are already doing it are the people you need to learn from. And they're not in the back of the room. They're already paying to be in the front of the room because they know the people that are serious about it, that are investing into it and ready to go are going to pay that money to be in that room. Now, do I agree or think you should do that if it's going to make you broke? No, because what that's not going to do is instantly make you wealthy or rich. It's not, but it's going to get you connected with people if you know how to network that can change your life. And since then, I will tell you, when I went to the real estate summit, one of the guys that I met at GrowthCon He's 200 million plus in assets that he manages. He's stayed over from me in Indiana. He called me before we went, said, "Hey, let's go grab dinner." Came out, bought dinner. He said, "Hey, how can I help?" That kind of access doesn't happen if you didn't pay to be in that room.
Exactly, that is true. Yeah, it's that is true. You pay, and that's very interesting because now the reason why I wanted to bring that up is because there's a lot of people that don't believe, like they see the immediate cost, but they don't see the future return, right?
100%.
Because there's somebody that's gonna watch this and go, "Oh, that's insane. Why would I spend 10,000?" But and am I making 20,000 immediately? Now, how much of that delayed gratification has to be there before you can actually, spend that amount of money?
The only way to be truly successful is accept delayed gratification. That's just how it is. Nothing is going to happen quickly that's worthwhile and that's going to be sustainable. So you have to get in the mindset of I'm going to invest in myself,
Okay.
and I'm going to know that if I invest in myself and I follow up and I put the work in, it's going to result in getting me where I need to go. I don't know how much you get into law of attraction,
Yeah, yeah.
manifestation.
I'm very big on the law of attraction because I personally believe I listen to a lot of Bob Proctor, the late Bob Proctor, a lot of Zig Ziglar, and I can't remember what it's in, Jim Rohn.
Yep,
Who doesn't know Jim Rohn, right? And it's almost as though you know, what you think, your imagination will create your reality,
correct. It
right?
will.
It will
Yep.
create a reality. And, I tell people like I immigrated here to America about 10 years ago. But it was always my dream and vision. You watching the movies, you're like, oh, America, America, America. And then when I came here, it was very never really thought it was gonna happen, but it was always a dream, right?
Right.
And now you mentioned, the delayed gratification. So is it that it's the belief, is the certainty that you believe that you're going to get the return in the future? Is that what allows you the ability to spend the money now, or how is that thought process on the law of attraction? How do you apply that?
So there's a couple different things. There's one, avoiding I always forget the term, the certain mindset, it's passing me now. But anyway, the scarcity mindset, right?
Yes,
Avoiding
yes,
the
yeah.
scarcity mindset, right? I spent my most of my life in a scarcity mindset. Oh, I can't spend $100. Oh, how am I going to do that? And the money would just keep going out and not enough coming back in, and it creates more
Mm,
problems for you. When
mm,
you believe in yourself and you look forward and you put yourself in that situation, and and you see and feel yourself in that situation, your mind, your subconscious mind starts to switch to, what are the steps to get there? How do I
yeah,
make that happen? It's not magic. It's not going to instantly you're a millionaire, but you change your mindset from how do I protect my money to how do I move to the next tier? How do I
make more
break
money.
through this level? Right. I actually was just talking to a friend about this today. When I lost my job and things came down, I was like, okay, well, maybe I should sell my car, sell my house, downgrade, do all these things and reduce it. And I said, you know what? No, I'm not going to do that. I'm going to maintain that because it's going to push me to do the next tier. It's good. I still feel, because I use like my cars for mentoring programs and reaching out to kids and doing all these different things to motivate. And I want to keep doing that. So, and then in my house, I love my neighborhood, love my house. I'm like, why would I do that?
Yeah,
I'll just make more money.
yeah.
Right. And it's changed my parameter from where I used to be, where I'd kind of like go into a hole
Contract.
and say, how do I protect it? To no, I can do that. And I've gone all in on this real estate. I'm eating off of my savings as well as investing it all into this property. But I'm looking at it and said, everything's there. It's all aligning. I'm doing it now. I'm just going to keep plugging forward. And everything's all laying into place, as well as kind of making those contacts. So yes, the delayed gratification is one of those, you have to believe in yourself. You have to believe that you can accomplish it and you do deserve that. And then put the work in to make it happen. If you
Mm,
just sit back and say, oh, I'll just keep manifesting, well, no, that's not going to
yeah,
necessarily
yeah,
work.
yeah,
You
man,
got to
yeah.
follow the path.
There's a difference between manifestation and action. There's a lot of people that are too scared to fail, right?
100%.
Or
Yep.
there's a lot, because like you can believe in yourself, but a lot of inaction comes from the fear of failure,
Yep.
right? Because a lot of people believe like, okay, if I manifest, then everything's going to go right.
Right.
Right. And share just I know you're still getting your feet wet as far as in the real estate game, as far as the flipping. How much failures have you experienced so far, especially just being new into the real estate game?
Well, I'll go back even farther. I've had multiple companies before. So I had a performance shop prior that was profitable in 2 months, global in 6 months, and then into a full-on shop in a year. So it was actually doing really well, and it ended up failing. I've had probably 3 other companies from that have failed, and different things in the corporate world that have failed.
Mm.
And then the budget's way off. We're having all different challenges
Yeah.
there. But here's the thing, like I always take a step back and say, there's no such thing as a loss unless you don't learn the lesson.
Mm.
So everything that is presented to us, every challenge we face, there's a lesson in it. And if you learn that lesson and you incorporate it into how you move forward, it's not a loss because you've learned something and you now can do the next thing better. It's building you to where you need to go. Now, if you just sit back with kind of that victim mentality, oh, it all broke down for me, everything failed, I'm not going to succeed. Now you've lost. You've put
Gotcha.
yourself in a position where you can't succeed because you've blocked yourself back into that scarcity mindset or that
Yeah.
victim mentality of I can't now move forward.
Yeah. No, you're saying that, and I'm thinking because in my business we had I have a sales team, and then I run the marketing team because I like to control the message. And there was a so the head of sales, we went into a kind of side, marketing and sales never, kind of
Yeah.
there's always that button head like, hey, I sent you this guy. Well, we didn't close him. So we kind of had it was to a point in which, and this was my fault in this, where I looked at the amount of money we were dropping on ads in the conversion process and then the return. And, I kind of went and I was like, hey, why is this not converting? And in a way, it was a scarcity mindset on my end because we lost one of our biggest customers.
Yeah.
Right? And when we lost our biggest, I flew down there to try to make it work. And then I was like, okay, how do we make this work? Google, Facebook, and all the media platforms are charging an enormous amount of money, and we were relying on this account to cover this. And I kind of went into that scarcity mindset, and in a way I was like about to replace the sales manager with someone else. And then I was I was listening to this book, and it was about ownership as well. And I was like, you know what, if I blame the sales team and I get another sales manager and the same thing happens, then I'm just going to keep going through sales managers, right? And I was like, you know what, it's my fault. Where did I go wrong? And then I started analyzing the marketing, how I used the marketing budget, which was stupid. And then I was like, that's where it's at. So then I, fixing everything with finance. But it's just interesting, with, I can't remember where my head was going with that, but just listen to that. I went into that scarcity mindset, and I think this was also a wake-up call as well for me.
Yeah.
But no, that's interesting. Now, I'm very intrigued as far as, do you think there's any applicability for AI and the data analytics that you can get from AI? Because I think ChatGPT and the OpenAI system has data from 2021 and previous, right? So
Yeah, sure. Yeah.
is there any applicability you can see that transferring into a real estate side of things for investments?
100%. You need more than 2021 data forward, but
Yeah.
absolutely. I mean, trends are huge, right? So I can absolutely see if it's not already invented, a market analysis tool that uses AI to determine hotspots, like looking at where people are migrating to, like where are jobs
Mm.
coming in, what is an undervalued asset in those areas, where are we seeing massive upward trends and spikes, and being able to quickly identify, say, this is a hotspot for investment, and then as soon as something hits MLS or even starts to hit pre-MLS or whatever they're doing, being able to pull that in and say, this is the one to grab. So I can see different uses of that. What will be interesting is if somebody takes it to the next level
Okay.
and goes into automated AI purchasing somehow. So before the second
Don't.
it hits, right? They have their parameters and they know what works and what doesn't, and it's purchased before it actually hits the MLS mainstream.
Got
So
you.
there's risk there, and I can see it going under a contract, but not actually getting through with the purchasing if you're doing anything other than cash, right? Um, I think there's going to have to be some regulations around that to be a little careful.
Okay.
I see some challenges there, but I can see there's a lot of different ways that could be used if implemented correctly.
Got you. Got you. Okay. 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 I'm interested. Okay. Now I know you're starting, and we haven't really spoken more about this. You think of starting syndication, right? Just with
Yeah.
investments, right? Now I'm curious as to what is the mission of of the syndicate, and also what is inspiring you to kind of get into that syndication?
So my whole mission, my why, is really to help others and see others succeed. So
Okay.
we do a lot of different things with, like I said, the mentoring for kids and do the motivation to those types of things. We have a few of our guys out here that do that. Um, from my perspective, the syndication is an opportunity to allow people to own part of a large apartment complex or building or whatever it is, get the tax benefits on the write-off,
Hmm.
make some monthly income. It's not huge right away, but also have a chance to make some serious wealth on the sale or exit, non-exit, which is where you just refi and take some money out.
Yeah.
So there are things that I want to do. Like I've got some people close to me. I want to get into a deal with, probably my first one with people that I know, and let them build some passive cash flow, and then hopefully some couple $1 million each on the sale. But I also want to get to where I can have it larger scale to help people that really want to get out of the corporate grind and find another way to build a different life and have an investment vehicle that is much more stable than, say, the stock market, which is, everybody's kind of hurting the stock market right now.
Yeah. But so now, is that going to work as like an accredited / non-accredited kind of deal where, you don't need a minimum of $250,000 or 200 to get in? You can get in for 4 or 5,000.
So the first couple will probably be accredited only because of the SEC requirements, and then accredited just means you either made 200,000 a year the past 2 years and
Hmm.
reasonable to make another third, or you have $1 million in assets. So yes, it is a lot. You're not required to invest 200 some thousand. I would set the minimum investment from a threshold perspective,
Okay.
but that's the SEC's requirements from an accredited investor. I do ultimately want to get to a point where I can do like Grant is doing and have a non-accredited fund. There is a whole lot more to that, and you have to have a bigger track record. So
Yeah.
I have to do a few in the accredited sense and then build that track record and then go through that process. And then absolutely, I'd love to extend it to non-accredited at some point.
Okay. Now, this is a lot of people are going to hate this comment, but this is my comment. I don't know if you're familiar with a guy named Alex Hormozy.
Yeah.
Yeah. He mentioned something, and he said, he said, stop selling. I think it was more to the point of sell to rich people, they pay better.
Yes. Yes.
Right. And
And you
he
need less
got,
of them.
uh,
And you need less of them to invest.
yeah, you need less of them, right? But he had so much people just coming after him for saying that, right? Now, in our business, we've also kind of, and I don't want anyone to kind of take this the wrong way, but it's almost as though the people that pay the most money give you the less headaches,
Correct.
right? Like we've sold, $10,000 product, $15,000, and they're like, call once a month. All right, let's go on a meeting. And we've had, $30 products being sold, and we've had every single day. Now, how are you able to, in a way, how do you mitigate the risk of, because when you have a lot of low investments, you get a lot of emotional and immediate
Correct.
gratification, right? How are you able to mitigate the risk of somebody coming in, because when you get someone into a not, let's say, a non-accredited fund, or, for a lower amount of money, how do you get them to be patient?
Yeah, that is challenging. And you're hitting on the right thing. It's mindset variance. The people that are in the wealthy or doing extremely well that are paying big have a different mindset. That's how they got there.
Exactly.
And the people that are struggling, it's usually a mindset problem and they don't want to admit that. They get very frustrated when they hear that, but it's the reality. I've been there. I understand that. So for moving to the non-accredited, however, it's a matter of really explaining. So you absolutely do not want to take somebody's last $5,000 or $10,000.
Of
You
course.
can't do that because they're going to struggle. But somebody that's been saving up for a while and says, "Hey, I just want to know where to invest." You sit them down, you walk them through, and you have all the paperwork there together, and say, "Hey, we're going to have quarterly earnings calls, or you're going to have a monthly check, or whatever it is. We're going to have touch bases, but this is locked up for 5 years or 10 years or whatever that time frame is, right?" And I am a data guy. I am used to explaining data things to non-data people. That's
Mhm.
that's where my background is going to help me out. So it's just being very clear and transparent. I think that's absolutely critical, especially when you're talking about money and emotions and things like that. Be transparent.
Okay.
This is where the money is going into. This is how it's being done. I'll give you continuous updates how it's performing, and we'll regularly look at what's the right time to exit, because
Okay.
how can I make the most money for everybody that's invested with me? And the other thing is also having my own money in it,
Of
right?
course. Yeah. Skin in the game.
Yeah, so they know that I'm in it with you. Not only am
Mm.
I managing it and making sure it's profitable, but my money is tied up. So if this loses, I lose too, and I'm not going to have that.
Yeah.
So it's about kind of really breaking it down for them, being transparent, and making sure they're really ready to do the investment.
Got you. Now, this is also just kind of a little bit of a transition here because, kind of getting a little condensed on time. You had mentioned you bought a Lamborghini, right? And the reason why you bought this was it was the most interesting story, but it was also the most mind-opening story as well. Is let's talk about why you bought the Lamborghini that I think is it the Aventador or the
It's a Huracan.
it's a Huracan, yeah. So what was that motivation behind buying the Huracan?
So back to when we talked about the diamond ticket and paying to play, right?
Yeah.
When I moved back to Ohio, I knew a group of guys that mostly had Lamborghinis, Ferraris, really well-off entrepreneurs. And I had a GTR. Loved that car. Fantastic car. But there's a big difference between a GTR and a Lamborghini. And I had the opportunity. I sold my GTR, did really well. And I was like, you know what? I want to get in that circle because I want to surround myself with people that are doing things bigger than me to learn from. So that was my initial reason. I wanted a Lambo anyway. I bought it and it instantly brought me into that group. The guy that runs it, he's a big YouTuber. He messaged me. He's like, "What the hell?" I was like, "I was going to get one, man." And I hang out with these guys all the time now. A couple of us are going out tonight.
Yeah.
But it helped me kind of get in the right circles. Now, the reason I keep it, and I think I mentioned this earlier, is we do things where we go to high schools or we go to shows or we do things to inspire and motivate kids, usually in under service communities.
Okay.
And we go and we talk about how to be an entrepreneur and how to kind of create wealth and financial education. And I actually have a couple things I'm doing large scale. I'm already talking to somebody in West LA. I'm talking to a guy in Vegas. That's another big YouTuber, trying to create a network from that where we're utilizing some of the cars to get people to come in and they ask, "Hey, how did you do it?" And you educate, like here, create financial education that doesn't exist today.
So what is that? So now let's say someone wants to be, let's say I don't have a Lamborghini. I'm working towards it, but let's say somebody has, the lifestyle, the car genuinely does, because most people just, you need the genuine people. They genuinely do, and they want to actually be part of the movement that you're currently working on. How can they find you?
So we're still in very early phases of it.
Okay.
But what I would say is I do a lot of my work on Instagram.
Okay.
I'm working on getting into YouTube. I just got to get better at editing and all that good stuff, doing the long form. But my IG, I'm actually walking through building a real estate investment company from scratch.
Okay.
And doing update videos, positives and negatives. And then I answer a lot of questions about some of that stuff. We do the videos about where we're going and kind of what we're doing. We do have people that are involved that don't drive Lamborghinis. They kind of come with us though, and we have like social media people. We have people that are just generally want to help. So there are things that we're doing. As far as getting kind of larger scale involved, that's coming. I'm working with some NFL athletes, some different influencers, some different things that are going on. We're building something where people will have an opportunity to invest time or invest money or be a part of a segment in a certain part of the country. So we're working on that. It's a little early phases right now, but that's definitely coming.
Okay, I'll leave your Instagram in the description. So if you guys want to check, if you want to just go ahead and send them some DMs. And if they wanted to learn more about strategic data consultants, what's the best way to reach you as well?
So they can reach out on the IG, but I also have Justin at strategicdataconsultants.com. I know it's a little bit of a mouthful, but that's my direct email for that company. I also have the websites, strategicdataconsultants.com. We have an ability to book a kind of introductory session, which is a free session. We can talk about kind of what you're looking to do and then determine if kind of the 1 hour power hour or an actual consultation is more beneficial for you. So we can do that as well. And like I said, I'm pretty accessible. So either way works for me.
Okay, I'll leave Justin's contact information in the description below. But Justin, this is a thing I'm trying to make a trend. That I do here is Emmanuel's list of dumb questions. Okay. So so Justin, have you ever lost a piece of data and found it under your desk or somewhere strange?
Have I lost data? Yeah.
But found it under your desk or somewhere.
Where I usually find it is somebody else's desk on an Excel spreadsheet or on a piece of paper. Usually not under my desk. I try to keep mine clean, but I always find somebody that's picked it up. Yep.
Okay. Second question. Like I said, have you ever thought about naming a specific data after yourself?
100%. Why wouldn't we want to leave a legacy? I've still got something that one of the companies is using 10 years later. I'd love to have my name on that.
Yeah,
It's Windows Data Store.
that
I got
actually does
outvoted.
actually. Yeah.
Yeah, I got outvoted though. We couldn't do
Wait, did you actually try?
that. I know I brought it up jokingly to my boss at that time. We like, no, we're going to do this.
Oh, it's funny. All right, third question. So since you're so good at managing data, do you also arrange your socks by color and size?
I do have a little OCD. You know, when I finally get them out and put them all together, I do try to arrange them.
Uh,
Is it perfect? No, I have to force myself to let the OCD go sometimes.
okay, okay. Now I know there's a bunch of other questions that hopefully we do a future interview, and we're gonna touch more on this question. But the last dumb question I have here is: if data could be transformed into a physical building, what type of real estate property will it be?
10,000 unit A+ apartment complex. That's what we.
Oh, okay. So this will be in New York somewhere. But yeah, just that's
Florida.
huh?
Florida. I'd rather go to Florida.
It is actually warmer there, yeah, and less taxes.
Less politics.
Huh?
Less politics too.
Less politics. But yeah, just it was absolute pleasure having you on. Anything else you want to share? Any new projects or anything you want to tell the audience?
No, like I said, if anybody's interested in following, the IG is a great place to do it. I'm happy to answer questions on data, on entrepreneurship, on the mentoring, all that stuff. I love reaching out to people and talking to people.
Okay.
Appreciate the time today, so I'm happy to help if people need it.
All right, guys, go ahead and check the description. And don't forget to sub to the channel. Thank you.